As we look at the current board, the United States stock market is closed right now, and the closing price for Ondas Inc., trading under the ticker symbol ONDS on the NASDAQ, sits at exactly $8.53 per share as of the final bell on June 23, 2026 at 4 p.m. Eastern Standard Time. This price reflects a notable downward intraday movement of about 4.05% from its previous close of $8.89, capping off a highly volatile multi-week stretch where the stock shed a massive chunk of its value after touching highs near $14.16 earlier in the month. For anyone tracking this asset on a modern individual brokerage or a mainstream retail trading setup, this recent price collapse looks like an absolute disaster on the surface. The expectation among casual observers browsing their preferred investing sites is that the company is bleeding out, struggling to find solid footing as small-cap tech faces brutal macroeconomic friction from persistent high-interest environments. However, the hidden reality completely upends this surface-level panic, creating an incredible paradox that regular retail participants are missing. While the stock price has drifted significantly lower over the past 3 weeks, the actual business operations of Ondas Inc. have been accelerating at an unprecedented operational pace, highlighted by its subsidiary Centrix entering a massive commercial collaboration with defense giant Lockheed Martin to integrate its specialized cyber defense systems into advanced counter-drone military platforms. Furthermore, the company has quietly pulled in over $150 million in fresh order activity for the second quarter alone, alongside a major $125 million acquisition of Cyberhawk. This stark disconnect between a plunging stock price and exploding industrial bookings is exactly why automated retail systems like those running on Schwab Intelligent Portfolios often capture massive shifts in volume before the broader public realizes what is happening. The market is treating this company like an endangered microcap penny stock, but the underlying corporate data shows a firm locking down critical contracts with some of the most capital-heavy defense and industrial operators on the planet. When regular people think about making a modern online investment, they naturally gravitate toward hyper-visible megacaps, constantly looking up Tesla stock or checking the daily swings of Apple stock to see where the broader market momentum is heading. If you open up a popular mobile application like the Robinhood app or look through the various menus on the Fidelity mobile app, the trending sections are almost always dominated by those exact household names or the unstoppable vertical run of Nvidia stock. But seasoned players who manage their accounts through an interactive broker's platform or handle self-investing through specialized individual accounts know that the real mispricings occur down in the lower tiers of market capitalization where institutional eyes are less focused. The average retail trader looking at Robinhood stock trading options sees ONDS dropping from $13.58 down to $8.53 in less than a month and immediately assumes the story is over. They do not look at the trading volumes, which have surged dramatically during this down leg, frequently exceeding 50 million to 90 million shares per session, proving that major institutional hands are actively shuffling positions under the cover of this retail sell-off. The immediate friction dragging down the stock is heavily tied to macro pressures and corporate execution costs rather than a lack of product demand. To understand the recent daily swings, we have to look closely at the trading mechanics available across major platforms like SoFi Invest or the interactive broker stock trading dashboard. For several quarters, investors utilizing online investing strategies have watched Ondas struggle with high cash burn rate as it builds out its proprietary wireless technology and drone infrastructure. When a company is expanding its footprint by spending millions on acquisitions like Cyberhawk, short-term traders using Robinhood fractional shares or active trading accounts get spooked by the immediate balance sheet dilution. They see the negative operating cash flows and choose to park their capital in safer instruments like Fidelity ETFs or high-yield cash accounts within the Robinhood cash management system. This herd behavior creates a massive supply of shares on the open market, allowing short sellers to aggressively drive the price down, completely ignoring the fact that the company's forward revenue profile is fundamentally shifting with massive government and defense sector orders. If you are looking for investment help to decode this puzzle, the contrast between expectations and reality comes down to how different tiers of investors evaluate tech platforms. The common ground among retail investors using generic investing sites is that small-cap tech companies are too risky to hold when interest rates stay sticky, because borrowing costs eat alive any potential future profits. This is why many automated services, including the SoFi Robo-Advisor or various pre-built portfolios within Fidelity Investments, have naturally rotated away from microcaps over the past year. But the contrarian take here is that Ondas does not operate a typical software or consumer app business model. They build the foundational, mission-critical communications infrastructure for heavy industries like rail transport, automated drone inspection, and national defense. When you buy a standard tech stock, you are betting on user acquisition and ad revenue. But when you look at an entity like Ondas, you are looking at a company whose proprietary systems are being baked directly into the long-term defense architecture of global military suppliers. Let's take a step back and look at what this company actually does to understand why its business model holds so much hidden leverage. Founded to address the severe limitations of standard industrial communications, Ondas Inc. operates through two distinct but deeply connected business segments, Ondas Networks and Ondas Autonomous Systems. The Networks division creates specialized software-defined wireless networks designed specifically for critical infrastructure, such as major freight railroads, oil and gas pipelines, and large-scale utilities. These industries cannot rely on standard public cellular networks because a single dropped signal or security breach could result in a multi-million-dollar train derailment or a catastrophic pipeline failure. Ondas developed a proprietary platform that allows these massive industrial operators to build their own private, highly secure, and incredibly reliable wide-area networks. This deep industry integration creates an incredibly sticky business model with massive switching costs.
Once a major railroad installs this infrastructure across thousands of miles of track, they are locked into the Ondas ecosystem for decades, generating predictable long-term service and licensing revenues. The second major arm of the business is their autonomous systems division, which has taken center stage in recent months through major moves in the counter-drone space. This segment includes American Robotics and the recently highlighted Centrix business, which focuses on providing fully automated drone-in-a-box solutions and advanced cyber defense tracking mechanisms. Instead of requiring a human pilot to manually fly a drone for security or industrial inspection, their systems can launch completely on their own, fly a pre-programmed mission over an industrial site or a military perimeter, collect highly detailed data, land back in their secure base station, and upload the information automatically. The recent collaboration with Lockheed Martin completely validates this technology on a global scale, as Centrix's unique cyber over radio frequency tracking systems are being integrated into major military defense programs to stop unauthorized drone swarms without jamming local civilian communications. Please comment below how many shares of Ondas Inc. you currently hold, or if you are completely avoiding small-cap tech in your personal portfolio right now. Looking at older reports and past financial performance, the company has historically been a classic high-growth, pre-profit tech play that required massive amounts of capital injection to keep the lights on during the development phase. If you look up the historical charts through a Fidelity brokerage account or check the multi-year data on the SoFi investing platform, you will see that Ondas has experienced massive multi-100% swings over the past 5 years, moving from under $2 all the way past $15 before crashing back down during broader market corrections. This extreme volatility is exactly why conservative wealth managers using Fidelity Wealth Management Services or conservative Schwab Intelligent Portfolios generally keep their clients exposed to large-scale index funds or trusted individual equities like Apple stock rather than microcap infrastructure plays. The company's cash flow statements from past years reveal heavy operating outflows, which forced management to frequently use equity dilution or debt structures to fund their massive research and development goals. For a long time, the market narrative was that the company had great technology but lacked the commercial scale to ever become a self-sustaining enterprise. However, the future outlook is where the massive tension between retail expectations and commercial reality will ultimately resolve itself. The primary catalyst over the next 12 to 24 months is the rapid monetization of their massive $150 million order backlog and the successful integration of the Cyberhawk acquisition. If the company can efficiently execute these contracts and convert their massive booking pipeline into realized high-margin revenue, the financial metrics displayed across online investment platforms will completely flip. When institutional algorithms scanning through the interactive broker's trading software or automated screens on the Fidelity trading platform notice a microcap company moving from deep operating losses to positive net income, the upward re-rating can happen with staggering speed. The massive short interest that has accumulated during the recent drop down to $8.53 could easily face a violent squeeze if upcoming quarterly earnings confirm that profit margins are expanding as defense contracts scale up. Of course, this setup does not come with substantial risks that any self-investing individual must carefully weigh before allocating capital. The biggest threat to Ondas remains execution risk. Managing massive international defense collaborations alongside complex drone rollouts requires flawless corporate oversight, and any delays in product delivery or unexpected integration costs from Cyberhawk could force the company to look for additional financing, causing further share dilution. Furthermore, small-cap stocks are highly sensitive to broader equity market liquidations. If macro pressures cause institutional investors to dump risk assets across the board, ONDS will get dragged down regardless of its individual business wins, forcing retail participants using basic Robinhood investments or SoFi stocks portfolios to endure painful paper losses. Investors need to monitor whether the company can maintain its current capital position without returning to the public markets for dilutive secondary offerings before these massive new contracts start generating meaningful free cash flow. Ultimately, the central insight here is that Ondas Inc. represents a classic case of a structural market lag where the public equity pricing is completely out of sync with the underlying corporate achievements. The general market expectation, visible in the downward trend on every retail individual broker screen, is that the company is a struggling small-cap tech firm losing its grip in a tough macroeconomic climate. The reality, backed by massive order volumes and elite defense partnerships, is that Ondas is successfully transforming itself into a critical provider of next-generation industrial communications and autonomous defense systems. While mainstream attention remains permanently locked on massive market movers like Tesla stock or Nvidia stock, the true asymmetric opportunities are often found in these mispriced corners of the market, where the data is messy but the structural thesis is sound. Whether you manage your assets through Fidelity IRAs, use interactive brokers' fees to optimize your active trading, or simply hold fractional shares on a basic mobile app, understanding this deep divergence between market narrative and corporate execution is the only way to navigate high-risk, high-reward small-cap tech successfully.